that the US economy is improving, the US labor market is strengthening. And why has this been? This has partially been down to the very strong support the US government gave the US economy in terms of very different fiscal policies, including the paychecks. It's also down to the action of the Federal Reserve, the US Central Bank, who cut interest rates essentially to zero and had a massive quantitative easing or a monetary easing program. And that was a way of reducing the value of the US dollar and essentially assisting and keeping the cost of borrowing money low as well. These are the two tools: fiscal policy, government action, and monetary policy, cutting interest rates and quantitative easing by the Federal Reserve, that actually brought about the sharp decline seen in the unemployment rate. If we look here at the histogram, the chart here, we can see there's a steady decrease rather in the unemployment rate, and this really kind of gives you a visual idea of how much the unemployment rate has fallen in the past basically 24 months, and quite a 24 months it's been at that. Another economic calendar that I like to use is the Forex Factory the trading economics economic calendar as well. They're also expecting around 30,000 jobs to have been added. They also cover in a bit more detail. That's why I like trading economics as well. They're showing that the average hourly rate of earnings, the previous reading was 5.1%. We're expecting that to tick up to 5.5%. Now, why is this important? Well, keep in mind that inflation in the US, headline CPI in the US, is running at 7.9%. So if your bills are rising by 7.9%, but if your actual pay is rising by only 5.1%, you're net worse off. So one of the kind of topics that's been much talked about recently in relation to the US jobs market is the so-called Great Resignation, where people are apparently quitting their jobs, starting their own business, or going back to education and training, and essentially leaving the labor market. Now, one of the kind of gripes employers and companies have had since the pandemic has finished has been they found it difficult to attract workers into the business and actually to stay on. Perhaps employers must actually pay higher wages, which of course would be good for workers, but that feeds into the prospect of higher interest rates, of higher inflation, which in turn leads into the prospect of higher interest rates. So I'll take a look now at some of the markets and to discuss some of the price actions. Throughout the webinar, I'll be covering is I'll discuss a bit of the US economic policy, the US economic situation. What I'll be doing is I'll be talking about what's going on with the major markets like the Dow Jones, the S&P 500, gold, oil contracts, the DAX over in Germany. But if there's any questions or comments you have about a certain topic I'm covering then and there, feel free to just ask. Alternatively, after the numbers come out in about 8 minutes, I'll have a kind of an open. I'll throw it open to looking at whatever markets you want me to look at. But it's usually the way with non-farm payrolls, whereby volatility is low throughout the session as traders await the numbers. So if you look here at the Dow Jones, it's been in a strong upward trend. Basically, from about the middle of March up until only this week, it's been in a very strong and bullish upward trend. A few days ago, it hit its highest level since early February, so that really underlines how bullish the recent upward move has been. Granted, it's pulled back in the past 24 hours. Yesterday, we heard from Russia, who stated that they want their gas payments to be made in Russian rubles. That was seen as kind of almost like an ever so slightly kind of escalating tensions a bit, but in reality, hasn't had a huge impact on the markets. But anything we can see here, the pullback, we do already appear to be off the recent lows of the past 12 to 24 hours. And if you look at the price action in the last few weeks and the last few days and the last few weeks, higher highs and higher lows, buying on the dip has been clearly a popular strategy in the last few weeks. So we've recovered a small bit on US 30. While we continue to hold above these two simple moving averages, it looks like this broader upward trend will continue. Moving higher from here, we could look to target this area around 35,439, and a break above that, we could see a target 35,870. Looking at the price action in the past 24, 48 hours, we can see it's been traded ever so slightly. Looking at the MACD indicator, we can see that momentum is in negative territory, which suggests the bears are in control. We do see a continuation of this downward move, the short-term downward move in the US 30. Where can we target? Well, we could potentially target this area here at 34,590, and a break beyond that, we can see a target this zone here around 34,320. Looking over in Germany at the DAX, it's a similar situation whereby the German economy is heavily reliant on natural gas from Russia. So war in Ukraine really kind of put a major pressure on the German stock market, but pressure on stock markets in Europe and the US across the board, but in particular the German market. And what have we seen here in the last few weeks? Similar situation. Since around the 7th or 8th of March, we saw a fairly decent rebound in the DE30, the DAX. In fact, earlier this week, it rose to a level last seen in late-ish February. In fact, at one point, the DAX was trading at a level last seen prior to the Russian invasion of Ukraine. So really going to show you how strong the market has been recently. Similar situation, it came under a bit of selling pressure yesterday, but we already appear to be off the lows of the past 12 hours. So we've already we're holding above these two moving averages. Just to clarify, I'm looking at a 4-hour chart here. My kind of standard time frame is 4 hours. And this is the 20-period moving average, the 50-period moving average, and the 100-period moving average. So while we continue to hold above the 50-period moving average and the 100-period moving average, it's likely this broader upward trend will continue. A rally from here could see a retest the 1-month high that was posted at the beginning of the week. And if you do break beyond that, we could then be looking at targeting at 15,235, and a break above that could see a target 15,544. Similar situation with the DAX, although the more medium-term trend has been higher over the last basically 2.5-3 weeks. It's worth noting in the past few days we have seen the beginning of a downward trend, whereby we've retreated from the peak, a lower low, a lower high, a lower low, a lower high. We're now going to be wondering, is this kind of rebound going to run out of steam, and are we going to move lower, or is it a case of we're going to move higher and actually retest the highs at the beginning of the week? If we do manage to break lower and we take out the lows of the last 12 hours, we could have to target this zone here around 14,186, and a break below that could see us down toward this zone here around 13,833. Now, what's going to be important is also going to be US dollar crosses. We can see here, move around some of the prices. We can see here that the euro has been in a fairly steady decline versus the US dollar in the last few weeks and months, given what's going on with Ukraine. What we can also see is that what's also going to be an issue is how strong or weak, as it turns out to be, is the US dollar farm payroll support. Keep in mind, a strong number is likely to get a ramp-up rhetoric that the Federal Reserve are going to introduce several more interest rate hikes this year, and we could even see some interest rate hikes of 50 basis points, a half of 1%. Typically, the Federal Reserve moved their interest rates by 25 basis points, a quarter of 1%, but more recently, there's been chatter they can actually look to increase by 50 basis points in the May meeting. So looking here at the potential areas, if they get a broader bearish trend that's continue, where could it go? Perhaps down towards 109.44. Oh, excuse me. Perhaps down towards 109.44, or perhaps if you have a large sell-off, it could take us back to 108.05. 108.05, by the way, was a 22-month low for euro dollar. So the lows that we saw here at the beginning of the month, when traders were most fearful of the war in Ukraine, had a major sell-off in global stock markets, and a major sell-off on the euro against multiple currencies, including the US dollar, but also pushed up the likes of gold, which we'll be coming on to in a bit. It also pushed up the likes of oil because there was fears of supply issues. So look out for 109.44 to the downside, and also 108.05. If you do manage to stage a bit of a rally, because let's face it, in the last 2.5-3 weeks, we have seen a reasonably decent rebound in euro dollar, although it hasn't gotten as high as retesting the 100-period moving average. The rebound here has been pretty good, but not amazing. If we can continue on this this shorter term upward move, where can we look to head to? Well, we could have to head back up towards 114, around 113.89. 1389, and a break beyond that could see us target this peak here, the highs of early February in around 114, in around 114.94, just shy 115, 114.94. So the numbers are coming out now in about a minute's time. So keep an eye out for what's going to go on with euro dollar. Are we going to see a continuation of the kind of broader bearish trend in euro dollar, or is it going to be a case of we're going to see a continuation of the more hawkish, or are we going to see a continuation of the rebound in the currency pair? Quickly take a look at the price action in gold. Gold has been edging lower recently. The last say 24 hours has been a stronger US dollar. There tends to be an inverse relationship between gold and the US dollar. And we're now wondering if the US dollar continues to get stronger, that might put further pressure on gold. So it's 1/2 the hour now. Seeing here on the alert, US non-farm payrolls report comes in at 431,000 jobs. A bit below expectation. They're expecting 490, so it's pretty good. The unemployment rate falls to 3.6%, better than expected. They're expecting a reading of 3.7%, so decent beat on the unemployment. We can see here, and also on average earnings increased by 5.2%, better than expected. They're expecting 5.5. It's ahead of the previous month as well, 5.2. But we can see here on the US non-farm payrolls report, it was overall a fairly decent update. It came in at 431,000 jobs, ever so slightly an improvement on the previous a bit down on the previous update. But the unemployment rate had a decent drop, and the wages were healthy. Also, I think it's worth noting that it seems as if the previous report was revised higher from 678,000 to 750. So overall, I would give this report an A-. It was very good, not amazing. It's a pity the headline number 431 didn't top 490, but that's the only thing I can say against this report. The number was fairly strong, not as high as it could have been. We saw a positive revision to the previous month's report, which is good. We saw a decent beat on the unemployment rate, which is good. I wouldn't be surprised if the unemployment rate now is back down to a level last seen, about 26 months ago or the likes. On top of that, the average earnings were good as well. So even before I actually look at the reaction in the markets, I suspect we're going to see a stronger US dollar, and in turn a weaker euro dollar, a weaker GBP USD. We're probably going to see a weaker gold price as well, and we probably could see a slight dip in stock markets, because let's face it, stock markets around the world, particularly American stock markets, were at multi-week highs, multi-month highs only in the last 24 to 48 hours. So chatter that the Federal Reserve might look to be very aggressive with their monetary tightening, with their hiking of interest rates, that could put a bit of pressure on stock markets. But although I think there'd be more of a downward move in say euro dollar or pound dollar or gold. Let's take a look now at the price action. What's the reaction been in gold? I'll take a look at the 1 minute chart here. You can see here very volatile reaction to very volatile trading at the moment. We can see here that there's a sharp move to the downside in gold. It's recovered somewhat. It's off the lows of the last couple of minutes, but at the same time, it hasn't actually retaken the level it was at prior to the number actually coming out. So if we take a look at on a 5 minute chart, get a bigger view, we can see here the fairly long wick of this candle here is denoting indecision. But notice how the lows here were actually kind of down towards levels last seen earlier on this morning, and quite frankly, we're a long way off from retesting the levels that were posted just before the announcement came out. So looking here at a market like gold, the last few days we've seen a downward move of gold, partially down to the stronger US dollar. If the US dollar does continue to get stronger and stronger, I suspect we're going to see further downward pressure on gold. Moving lower from here, we could head back down towards 1905, and if you have a decent break below 1905, you could head back down towards 1890. Now, in the kind of more medium, if you're looking beyond this time frame here, the last 24 hours to 48 hours, basically throughout this week, We have seen a decent enough rally in gold. It wasn't huge because the peak that we saw here in this week didn't even get close to retesting the peak of last week. But nonetheless, the market has been moving higher. If gold can continue to hold kind of in around the kind of above the kind of say the 1912, 1915 area, it's possible that the more medium-term upward trend will continue. And a rally from here could see it clear this peak, and then a break beyond that could see it retest the highs of last week in at 1956. I'll take a look now at euro dollar. I talked about how I believe euro dollar will come under selling pressure with a strong number like that. That's precisely what we've seen. Once again, whenever non-farm payrolls comes out, we all see a lot of volatility. To be perfectly honest, I was in this scenario. I would wait for the numbers to come out, wait for the market to have its reaction, and then think everything is going to settle down, and then look to kind of strategize. What do you do? My initial reaction is that this is an overall, it's a good report, and I think in the next few hours, I would be surprised if euro dollar is actually a bit lower than the current levels that we're seeing it at. But as always, we can see the knee-jerk reaction to the numbers here is kind of finding its feet. But I think the overall kind of bearish trend here, I'm not looking at a 5-minute window. Excuse me. The overall bearish trend here is still very much intact. And if you take a look at it on an hourly basis, we can see here just how much the currency pair has been declining in the last few hours. We're now back to levels last seen about 2 or 3 days ago, which really doesn't sound like too much, but it's significant nonetheless because it's clear the trend is heading lower. So for euro dollar, I'll be looking back down towards these sorts of areas here in around just south of 110. 110 is the first and foremost level I'll be looking out for. Then I'll be looking out for in around kind of 109.46. And if you take out 109.46, I'm looking out to 109 itself. And then of course, if you clear 109, I'll be looking back down towards this area here, 108.05, which by the way was a 22-month low. If you can manage to kind of stage a rally, the first area I'll be looking out for is this peak here in around 1.1183, and then beyond that up towards kind of 112, and then going beyond that again up towards 112.69. I've got a comment here in relation to the US dollar versus the South African rand. Let's take a look now. To be perfectly honest, my first reaction is it's a currency pair I don't actually look at a huge amount. So I need to kind of ensure that I actually have it in here in the mix. US dollar, South African rand. So to be perfectly honest, this is not a currency pair I typically look at. So just bear with me for 1 second. So the kind of big picture view for USD rand has been to the downside. We can see here that the lows that we fell to only yesterday, we're back down to levels last seen in October. So we're talking multi-month lows that have been set in dollar rand, which in my mind really kind of underlines how bearish the sentiment is. It's a clear example of a series of lower lows and lower highs all the way along. So as far as I'm concerned, I'm not looking at a 4-hour chart here. Although we've had a decent enough rebound here, we're well off the recent lows. Notice how the peaks that we saw here haven't retested the peaks that were set here. And also, this moving average here is the 50-period moving average. If you follow this around here, you can see the 50-period moving average acted nicely as resistance here in the middle of March. And if you follow it around even further along, you can see on a few occasions it acted as support as along here, resistance here, support here. You know, what I often say is if a metric has been of importance in the past, it makes it more likely to be important in the future, but there's no guarantees. So although I can see that it's clearly off the lows, given the fact that we haven't properly retested and cleared the 50-period moving average, we haven't even retested the highs of last week. That's going to suggest to me that the overall bearish trend is in effect. As you can see here, as the market was coming down the last few weeks, by selling the rallies, selling the gains, selling the rallies has been a popular tactic in the last few days and weeks. If we do look to kind of move lower from here, we could look to head back down towards kind of 14. A break below that could see us back down towards 13. If we do manage to stage a rally and we do kind of clear this area here, these peaks here in around 14.73, the kind of 1480 zone, we could then be looking at heading back up towards these peaks that are set along here, in just shy of 15. So they're the kind of levels I'm looking out for on USD ZAR. Are there any other markets you want me to have a look at? Feel free to just shout out. Don't be shy. I'm here to actually just happily answer your questions. I'll take a look now and see how things have gotten on with the Dow Jones. My reaction would be a strong number increases the chatter that the Federal Reserve are going to become more hawkish. And with that, we'll probably actually see a bit of a sell-off in stocks. But let's see how things have fared out in the last few minutes. Initial reaction, I'm not looking at a 1 minute chart, which to be fair, I'm only really doing just to kind of see how things react in the moment. I wouldn't really use a 1 minute chart to kind of try to figure out where the market's going. I'd only just put this, I'll be looking at it out of interest is to see how quickly the market moves when the numbers came out. And there's no hard and fast rules, but it can often be the case that the market has it can be the case that the kind of initial reaction is what becomes the theme of the day. The market moved aggressively lower. People are kind of analyzing the headline non-farm payrolls rate, the revision to the previous report, average earnings, and unemployment all at the same time. You got 4 bits of information there in one go, and people are often kind of all trying to figure out where they're going. We've had a bit of a rebound because a bit of a breather. Now the market's finding its feet. It does appear to be already turning lower again. So I wouldn't be surprised in the next few minutes if we clear this low here and we move further south. Confirming my view that the more kind of short-term bearish trend is going to continue in light of the fairly impressive US non-farm payrolls report. So I'm not looking at it on an hourly chart here. This is the price action in the last few hours. So we can see here that we're off the recent lows of the past 12 hours. We're off well off above the lows of the past 2 or 3 days. But it does seem as if the market can't reclaim this 20-hour moving average here, I think we could lose further ground. So in the near term, we could be looking at head back towards, well, just south of 34,700. And if you do have a break below 34,700, we could then be heading back down towards 34,550, thereabouts. Now, if we do manage to kind of stage a rally, and if the more medium-term upward trend does continue, let's face it, you can't really ignore. This is a perfect trend line. You can't really ignore this price action here. It's in a fairly decent uptrend. If we can manage to kind of hold above this area here, put the trend line actually in. If we can manage to hold above this trend line here, because a trend line with 2 points is a tentative trend line. A trend line with 3 points is a confirmed trend line. So we can see here the low here, the low here, and the lows were basically of kind of the last 24 hours. If we continue to hold above this trend line here, just as a reminder, this is a 1 hour chart I'm looking at. If we continue to hold above this trend line here, it's possible the more kind of medium-term upward trend will continue. But now the kind of battle is on. Are we going to have a continuation of the kind of short-term bearish trend or the more medium-term upward trend? That's what the kind of market's battling between the two. Like I said, I suspect in the next 24 hours before the trading day is out, I suspect we're more likely to retest and this trend line or the lows than we are to rally above to kind of say these peaks that were set along here. But if you do manage to get a fairly decent rally in the US 30, where can we look to head to? If you kind of move above these two moving averages here, I'll be first and foremost looking up towards 35,000, and then beyond that up towards this area here around say 35,145, and then beyond that, this peak here around 35,305. Dollar Swiss. Take a look now at dollar Swiss. Yeah, I've already mentioned the USD ZAR. Coming on now to dollar Swiss. So as I mentioned, I think this report is positive for the US dollar. Let's see how dollar Swiss is playing out. So looking at the price action in the last few days, it's been over the last few months, we've broadly been moving higher, but we have had an aggressive move lower in dollar Swiss. Basically, the last few months here, we can see here from the kind of middle of March onwards, it's been moving aggressively lower. We can see a lower low, lower high, lower low, lower high, a series of lower lows and lower highs. The lows that we saw in the past, say, 24 hours or so in dollar Swiss was back to a level last seen in the first week of March. So, you know, that really the fact that we hit a multi-week low really tells me that there's kind of uncertainty in dollar Swiss, all right? With that, you know, we're holding below these 3 simple moving averages. We recently hit a multi-week low. Even when we've rebounded off the recent lows, we haven't had a decent rebound because we haven't even kind of gotten close to retesting these 3 simple moving averages. So it seems to me the kind of broader bearish trend dollar Swiss is still in effect. If you move lower from here, first and foremost, I've been looking at retesting the recent lows in around 0.9193, and a break below that could see us back down towards this low here, the lows of late February in around 0.9150. Now, if you can manage to kind of stage a rally from here, where can we look to head to? Well, first and foremost, we could look to head up towards the 100 period moving average. Once again, I'm looking at a 4-hour chart, but if you follow this metric around here, you can see it kind of acts as a bit of a support zone here, bit of a support zone here. You can see on this over here, it actually has support, it actually has resistance here. So once again, the metric has been relevant in the past, it makes it more likely to be relevant in the future, but there are no guarantees. And that moving average comes into play in around 0.95, 0.9590, just shy of 0.93, 0.9295. And if you get a decent rally beyond that, you can then be looking at targeting these peaks here in around 0.9370. As I mentioned, this is strong for the US dollar. I'm not looking at dollar Swiss on a 1-minute chart just to kind of see what's what. And as you can see, it's been a very aggressive move to the upside. When the move to the upside, we've retreated ever so slightly. You know, in the very, very near term, we might actually continue this upward move in dollar Swiss. But as I established, the broader bearish trend is still in effect. So if we do see a rally in dollar Swiss, who knows? That might see some kind of fresh short sellers enter the fold. Dollar Swiss. I guess someone asking about dollar yen. I'm not coming out to USD JPY. I've already talked about how the US dollar is fairly strong. Are we going to see a downward move in dollar yen? Any of the markets you want me to look at? Feel just type in the ask the questions in the comment section. So the really big view is that dollar yen has been rising. You know, dollar yen hit its highest level since 2015, 2016. A multi-year high was set at the beginning of this week. I think it was the highest level since 2015. So we're talking a 6-7 year high in dollar yen. And other yen crosses, be it CAD yen or be it sterling yen, have also been getting multi-year highs, you know, like 6-year highs. So the really big picture is to the upside in dollar yen. Looking at the price action in the last 24, 48 hours, sure, we've had a bit of a pullback, but notice how when we did pull back, we only briefly drifted traded below the 50-period moving average. It wasn't even that big of a pullback. It didn't even get anywhere near retesting the 100-period moving average. And notice how the lows that we did manage to set here were essentially in line with this low here and this peak here. So this entire zone here, a classic example of previous resistance becoming new support, what we saw here. And then if you look at the price action in the last few hours, we've moved quite aggressively away from that support zone. So we're back comfortably back above these three moving averages. So the kind of broader upward trend is in effect. Let's take a look at the 1 minute chart. Has gained a bit of ground in the wake of the very well received US non-farm payroll support. So that kind of confirms my view that the more above the short term and the longer term trend for dollar yen is higher. So if we do continue on in this bullish trend, we're going to lift the target. I'm looking up towards the recent peak here in at 1.2377. Then beyond that, up towards we'd be looking up and towards say 125, 127, and 130, but that's kind of much further out. Will USD return to its peak of 125 spot 12, or is that a long shot? I think it's given how much ground dollar yen has traveled in the last few weeks. You know, if we look, today is the 1st of April. If we go right back to the very beginning of March, dollar yen was in around 115, and now even though we've been as high as about 123. So we went from 115 to 123. That's 800. No, that's a huge move. That's 800 big points. A massive move in dollar yen. We're currently at 122 spot 70. You know, 125 spot 12 is only about less than 300 pips away. It's about 200. I'm gonna say 20 pips away or something like that. So given that this currency pair can often move 100 pips in a day, you know, it's not beyond the realms of possibility that we could be up at we could be retesting 125 spot 12, you know, either later tonight, maybe not, but at the beginning of next week, provided the kind of overall bullish trend continues. I'm conscious of the fact now that we've been running this webinar now for over 35 minutes. I'll be looking to wrap things up in the next, 5 or 10 minutes. Any questions you have for me? Any other markets you want me to take a look at? I'll happily take a look at whatever you want me to look at. A while ago, I looked at the DE30. I've taken another look at how the DAX is getting on. So, if the Federal Reserve do adopt a more hawkish policy in light of the well-received non-farm payroll support, it'll probably have a bit of an impact on US stock markets and stock markets around the world in general. But it'll probably have a bit of a less impact on the German stock market because it's not actually, it's outside the Federal Reserve's jurisdiction. But if we see European stock markets around the world falling, US stock markets falling, and that typically weighs on the stock markets. In addition to that, if central banks kind of like to, loosely speaking, keep in step with each other, that the ECB is nowhere near, isn't particularly close to hiking interest rates anytime soon. But if they see the Federal Reserve going further and further down the hiking interest rate path, it might encourage them to go, right, maybe we should be hiking interest rates as well. So I think I suspect we'll have seen a negative reaction to the numbers. The non-farm payrolls number, and of course we can see here we've been moving lower the last few minutes. The DE30 has been driving lower the last few minutes. Looking at the 4-hour chart here, the broader upward trend is still in effect. Even though we've lost a bit of ground in the last few minutes, we're still comfortably above the lows of the past 12 hours. So the kind of broader bullish trend is still in effect. As I mentioned before, if you look at the price action race in the last few weeks, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. It's a textbook definition of higher highs and higher lows. So the textbook definition of an upward trend. So buying on the dip has been a popular strategy for the DE30 in the last few days and weeks. So if this broader upward trend does continue, we could head up towards 14,900, thereabouts. Got a comment here. Can you talk about the prediction on the rise of the AUD USD? Yes, I will. I think it has AUD in the chart here. Yes. So although the US dollar itself has been in pretty good shape in the last few weeks, the Australian dollar, the Australian dollar itself has been quite powerful. Why is this? Well, the Australian dollar is considered to be a risk-on asset or risk-on currency. So whenever people are feeling optimistic and bullish about the health of the global economy, excuse me. Whenever people are feeling optimistic about the health of the global economy, they tend to buy assets and currency pairs or currencies that are considered to be higher risk, and the Australian dollar falls into that category. It's also we're talking about in the last few weeks and months. Last few weeks we have seen a decent rally in metals. Why is this? People are scared about inflation, so they're buying up metals now. So to kind of avoid paying even higher prices 3 months, 6 months down the line. In addition to that, the war in Ukraine has really ramped up the commodities market, because Russia is a major exporter of minerals, be it oil and gas, and also of metals. And if things going to continue, the way things are going, Russia is a bit of a pariah state. Some companies and countries don't want to be seen to be dealing with Russia. Therefore, it's perceived that there's going to be a shortage of metals, and therefore that squeezed up metals and in turn the Australian dollar. So even though the US dollar is strong, the Australian dollar is very strong as well. And that's why it was only not that long ago, the Aussie dollar was back up to a level last seen in October. So it was a multi-month high we saw on AUD USD. So that really tells you, as far as I'm concerned, everything you need to know about the Aussie dollar. So it's really strong if it's hitting a kind of 5 going on 6 month high. We can see here, even in the last few hours, when we have had a bit of a retreat here, we've already managed to kind of rebound yet again. We're back comfortably above the 20 period, the 50 period, and the 100 period moving average. So I think while we continue to hold above these metrics, it's likely the broader upward trend will continue. Moving higher from here, we could have the retest of recent peaks at 0.7539. And if you break above that, we could then be looking at targeting 0.7600. Now, looking to the downside, if you do have a fairly large break lower, if you do break below this moving average here, the 50 period moving average, once again, I'm looking at a 4-hour chart. If you break below the 50 period moving average, that could be a bit concerning. Why? Because on a few occasions here, the market came close to retesting the 50 period moving average, but it didn't quite get there. So it tells me that whenever the market falls to that particular metric, buyers step in. And if you do manage to, if we break below that, that'll kind of suggest, oh wait, maybe there are fewer buyers than we thought, and so we could see a sharp move lower. If you do see any declines in AUD USD from here, we could have to target the area of 0.7428, which you can see here was a peak here, a resistance point here. It briefly acted as kind of resistance here, or a bit of a consolidation zone here, or it could went on to move higher. So look out for 0.7428. If you do break below that, we could then be looking heading back down towards these lows here in around 0.7373. Excuse me. The US dollar, we don't actually have the US dollar index as a product on our platform, but I can tell you right now, the US dollar itself has done quite well. I'd like to wrap things up here now because we're coming up to being running for 45 minutes. But I can tell you right now, the US dollar itself has done quite well in this update. So taking a look here at the at the USD CAD. So we look at the price action of dollar CAD. We can see it was actually been moving higher as a result. This here, the Canadian US dollar versus the Canadian dollar, it's been moving higher as a result of the US non-farm payrolls. Take a look now at the USD versus the JPY. We can see here it's been moving higher as a result of the US non-farm payrolls. So it's gaining against the CAD, gaining against the yen. I take a look now at dollar yen. I take a look against the euro. So we can see here euro dollar is falling, and if euro dollar is falling, that's because the USD itself is rising. So we can see here euro dollar is falling, dollar CAD is rising, dollar yen is rising. So the kind of common theme is this is strong for the US dollar. I got an individual here asking about dollar CAD. I'll take a quick look at dollar CAD and then I'll look to wrap things up because essentially this update will be going on for about 45 minutes, a bit longer than expected. Dollar CAD, if you're trading the Canadian dollar or any of the Canadian dollar crosses, you have to be keeping an eye on what's going on with the oil market. Whether you trade oil or not is irrelevant. But if you're trading the Canadian dollar, you must be looking at what's going on with oil, because Canada has a fairly large oil and gas sector. So therefore, the Canadian dollar often gets dragged around by the movements in the oil market. So the kind of big picture view for dollar CAD has been very much to the downside. We talked, oil is trading over $100 a barrel. A lot of fear surrounding Russia. What's going to happen with energy? Are we going to have shortages? What's going to happen there? On that regard, we've had a very elevated oil price, and the very elevated oil price has driven up demand for the Canadian dollar. Even though the US dollar itself is quite strong, it's almost as if the rally in the Canadian dollar is that much stronger than the rally in the US dollar. Hence why we've seen this kind of sharp move to the downside. And if you look at the price action, we can see here that dollar CAD recently fell to levels last seen in late 2020. So we're talking, late 2021 rather. The dollar CAD recently fell back to a level last seen in November. So we're talking about about a 4 going on a 5-month low. Dollar CAD fell to. So I've been taking that as a sign that the market's quite bearish. Although we have rebounded somewhat here, it's worth noting that the peaks that we've seen here haven't gotten anywhere near to retesting this peak here. It's also worth pointing out, even though we have seen a couple of the lows have been higher, a couple of higher lows, when we have seen a rally here, it's worth pointing out we didn't even manage to retest the 50-period moving average, let alone get anywhere near the 100-period moving average. So in the very, very short term, not surprisingly, because it's a good job support, dollar CAD has been gaining ground. But I think that could actually lead to further short sellers enter the fold, because let's face it, when we have had a rally, look at all the kind of rallies we've had in the last kind of pullbacks and rallies we've seen in the last few weeks and months in dollar CAD. By and large, most of them failed, but the market turned over again. So I would, in the near term, I think we're more likely to get a retest. The recent lows have been around 124.20 than we are to retest, say, 126 on dollar CAD. Here in London, it's just gone 2 minutes past the hour. I'm going to look to wrap things up now. It's just gone 2 o'clock here. For those of you that joined, I really appreciate you sticking around to the very end. I know this webinar was done a bit longer than planned, but there's a lot going on in the markets, so I can't really be cutting these events too short. For those of you that are on Twitter, feel free to follow me on Twitter. My handle is @dmadden_equity. Please, if you do follow me on Twitter, please, if you have any questions about the markets, get in touch, tweet me. Now, I can't give you advice because our company doesn't offer advice, but I can happily kind of talk about what's going on in the markets. Talk about the trend, talk about the potential areas of importance in relation to prices in terms of levels to watch out for to the upside and to the downside. That's all it for this live webinar. I want to thank you for all those that stayed at the end, and please feel free to sign up to other webinars that we offer, and also, most importantly, next month's US non-farm payrolls. So everyone, have a good day, have a good evening, and have a good weekend. Thank you very much.